India's ambition to become a global hub for electronics faces a tough challenge from countries that have been more savvy about taking advantage of free trade agreements and keeping import tariffs low. According to estimates by the India Cellular and Electronics Association, or ICEA, exports by Vietnam, Mexico, and Thailand stood at 9.2 times, 6.3 times, and 3.8 times that of India in 2021. And even if India meets its ambitious FY26 electronics export target, which is pegged between $105 and $130 billion, it will still be far behind Vietnam's, which stood at over $130 billion in 2021. In FY23, India exported electronics worth only $24 billion. Moreover, the ICEA feels that it will be challenging to even reach the government's FY26 target because even if the highest growth rate achieved in 2015 is maintained over the next 3 fiscal years, India's exports will only touch about $90 billion by FY26. However, there is some good news in one segment of the broader electronics ecosystem. According to One Financial Daily, India manufactured wearables like smartwatches and earphones worth almost $970 million in FY23, up from almost nothing in FY22. That's because of the implementation of the Phased Manufacturing Plan, or PMP. And the industry is reportedly looking to double production to almost $2 billion in FY24. According to the same report, when it comes to electronics manufacturing, wearables are expected to contribute $8 billion by 2026, of which $3 billion will be exports. A study by Feedback Advisory and ICEA points out that India could corner at least 10% of the global market share through exports by 2026. In 2022, the implementation of PMP on wearables boosted domestic production to 40% of the local market that year, from next to nothing the previous year. According to an IDC India report, the Indian wearables market, which grew 47% at 100 million units shipped in 2022, was led by Indian company Boat, which had an almost 24% market share. The news is also heartening on the demand side. Citing IDC India data, a recent report said that India was likely to emerge as the world's largest market for wearables by the end of 2023, even as the North American and Chinese markets were showing signs of saturation. India could account for up to 135 million units, or over 25% of the total 504 million wearable units that will be shipped globally. In a big push to the industry, the PMP brought down customs duty on most wearable components to zero in FY23. But duties will be charged at a rate between 5 to 15% between FY24 to FY26. Against this backdrop, can India finally become a global wearables powerhouse?
I am very confident that in coming years, India will be a very major player in the wearable hearable market. And my conviction comes back is supported by 2 major points. One, the makers here, the 75% of the market is controlled by three big brands. This means they already have the scale. Earlier, everything was coming in CBU. However, government started a PMP program because of which almost 80% of the production is already shifted to India. I think in coming quarters, the balance 20% will also be coming to India. However, still the backward integration has not happened. So I feel in coming quarters, most of these brands will start doing some backward integration and adding more value to the product locally. Thirdly, once we are able to address the local market, definitely all of them will be looking forward to exports. And with the volume support that they are getting, that they're huge volumes, I see no reason why they should not be able to invest in design. So I see that somewhere 2024 would be a design-led manufacturing happening in India. And once that happens, the exports will start.
India has the potential to become one of the largest manufacturers of wearables. In terms of volume, I will specifically mention, because India has the favorable government policies. Even demand pull is there. Brands are also pushing a lot from themselves in terms of marketing support, in terms of launching and upgrading their portfolio. Apart from that, the price point at which these brands are launching their products, all these factors combined are paving the way for future growth.
And what are the major hurdles it will have to overcome along the way?
If we have to fight with China in the initial 1, 2, 3 years, because industry will be already investing hugely into the backward integration and the designing, they will need certain support coming in from government by way of a PLI so that they can go in for exports. And we have discussion with the MIT on this. MIT is open. A committee has been formed under ICA, wherein I'm also a member, and we are trying to push for it. Hopefully, the time window is very small because the elections are going to be announced, will be happening sometime next year. So we have a window till September, October, before which the PLI has to come. So even though window is small, but we are bullish that looking at the export prospects, the way industry has come up and scaled up the local domestic production, government is going to come and support the industry.
What we need is the true R&D, the true innovation, the design factor, the feature innovation that should happen within the country. So I'm here not just talking about the hardware part, but I'm also talking about the software developments. That's where these premium players are playing a big role.
Indian firms will soon have the domestic market cornered, but conquering foreign shores will call for a dedicated production-linked incentive scheme and private R&D investments to compete with Apple and Samsung's value proposition in developed markets.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's about to land his dream job. Business Standard.